Good morning from London. I'm Kriti Gupta alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Substantial progress after 2 days of talks. That's how the U.S. and China described the positive tone as the world's two largest economies look to de-escalate the trade war. We'll hear from the U.S. trade delegation live from Geneva in about an hour's time. Next step, pharmaceuticals. President Donald Trump saying he plans to order a cut in U.S. prescription drug costs, predicting pharmaceutical prices could drop as much as 80%. We're going to watch the drug makers at the European Open. And another beat, UniCredit posting record profit, bolstering CEO Andrea Orcell's case for acquisitions in Italy and abroad. Meanwhile, the Spanish government considering another tie-up for Banco Sabadell in a move to fend off an unsolicited bid from rival BBVA. Guy.
Kriti, we're risk on. We're waiting for this press conference. We're an hour away from that press conference in Geneva. Scott Bessent is going to be updating us. For now, though, substantial progress is enough to get us up and risk on. Eurostoxx 50 futures up. S&P futures up even more, 1.5%. The dollar is also gaining ground. Euro-dollar trading at 112. I want to highlight what is happening, though, with the Japanese 30-year. It is in free fall right now. We're approaching 3%. If you want to see an example of the stagflation trade, that is it. Keep an eye on what is happening at the back end of the Japanese curve. We have a lot to talk about. We're an hour away from this press conference. The countdown to the opening trade starts right now. Good morning. We're an hour away. Possibly the most consequential event of the week is about to happen in Geneva. Scott Bessent, Jamieson, Greer briefing on what happened this weekend in terms of these talks that we had with the Chinese. At the same time, we're also potentially going to be getting a Chinese briefing as well. Keep an eye on that as well. Kriti, we've kind of come to the end of the weekend. We know that we've had substantial progress. That is the line that was used. That was enough to get us risk on. But now we start to get details. We're an hour away from details, and the market is on tenterhooks.
The market's on tenterhooks, but also the bar is high. They're expecting not just good news, they're expecting spectacular news. Futures in the States higher by 1.5%. The Chinese yuan is extremely strong against the dollar this morning. Already, we're seeing elements of substantial progress. We're seeing the starts of a trade mechanism. We're talking about potentially laying the groundwork for future talks. Do we fall short in an hour's time?
So I actually take a different view. I think that actually the bar is quite low here, and I think substantial progress was enough to get us over that bar this morning. The market just doesn't want any bad news. The market just wants some sign that progress is going to be happening, a framework for those talks, something that gives us a signal that we are de-escalating here, that we're going to go into a structured round of negotiations that are quantifiable, manageable. You can deal with risk. You can understand what is happening here. That, I think, is kind of where we are this morning in terms of what the expectations are. Anything that kind of fulfills that criteria probably is enough to keep the kind of the risk-on mood. Substantial progress was enough to get us up 1.5% on US futures. What needs to happen here to keep it going? I don't know the bar's that high for that.
So Caroline Leavitt, the White House press secretary, over the weekend kind of substantiated the 80% level. When she was asked, what does substantial progress actually mean? She said, well, Donald Trump thinks 80% is a good level, which I think brings us back to our conversation from last week. Is 80% a good level? Is coming down from 150 to 80% enough progress?
What I'm hearing is that anything north of 50%, certainly 60%, is basically still enough to effectively mean that you don't get any trade between China and the United States. So 80% would be too much. Leavitt's job is to kind of reinforce what the president says. So I don't know whether or not that's actually new news.
I'll take the flip of it. What happens if we don't get a number?
Do we need a number? OK, do you actually need a number at this point, or do you just need a framework? Here's how it's going to work. We're going to work on this sector by sector. We're going to work our way through this. Different sectors are going to be affected in different ways, but there is a framework, a way of kind of working through that. Is that enough? The problem with that is, to your point, that if you don't get a number, what this means is that the 145 continues. Do we need to come down? Basically, anything north of 50, 60% that kind of is there for a while is going to means that the damage carries on for a long time. Even though talks are going to be happening, the damage is being done and will ultimately show up in the data. I don't know. We're going to find out in an hour. We're going to bring you that press conference live and in full when it happens. Just as the European markets open as well. So they're going to be digesting this in real time. And that's just one piece of it, because there's plenty of carve-outs in those kind of country tariffs as well. Then there's the sectoral tariffs.
you have to keep an eye on. We're getting a hint of that over the weekend when it comes to the pharmaceutical space.
I'd say, is this tariffs or is this just a pricing story? I'm not sure. I think the two are different.
Sure.
I think Trump has always been annoyed at the fact that Americans pay more for their pharmaceuticals, and as a result, he wants to bring it down. He basically wants to benchmark against the cheapest other country out there and basically benchmark US prices against that. The problem with that, well, there's twofold problem with that. One is that it's going to really hit the pharma stocks, and many of those are American pharma stocks, so they're going to be impacted. But global, you've already seen the hit in Asia. You're going to see it in Europe. You're going to see it in the United States as well. The other one is, and we were talking to the AstraZeneca CEO, Pascal Soriot, about this only a few days ago. The US pricing model, he thinks, is correct. Now, he would say that because it's higher, but he says if you want innovation, you have to invest and you have to have the right prices. The rest of the world, he says, is wrong. The US is right. So does this ultimately hit drug innovation going forward from here? Because these companies aren't going to be making as much money.
They're not. I think it's fascinating, though, just from a political perspective, this is exactly what Joe Biden was trying to do when it comes to some of the drug pricing and the prescription costs. It's exactly what Kamala Harris included in her campaign as well. So it's kind of interesting that both administrations, they have their differences, but on this is something that they're quite unified on.
Yeah.
You mentioned whether this is going to hit the pharmaceuticals. A lot of the folks, you mentioned AstraZeneca, Novo Nordisk, of course, it's not a traditional pharmaceutical maker necessarily, but 60% of their revenue comes from the States. Is this the first step towards something that's a little bit more damaging from a tariff perspective?
Oh, I think these guys are going to get hit hard by this. You reduce prices 30, 40, 50, 60, 70, 80%, then you are going to see some substantial hits. We think that announcement, we think the executive order is going to be signed at 9 a.m. Eastern. So we're going to get some clarification. It's a big day for clarification. Let's talk about the banks. You're focused on the Spanish banks. UniCredit out with a beat again this morning. The Italian story is firmly in focus as well. What on earth is happening with Sabadell? I have no idea at this point. I'm not even sure the Spanish government knows. There's a lot of things in flux in the banking sector this morning.
Well, let's start with UniCredit because you mentioned UniCredit first. I think this is really important. They had a record profit. That is a very big deal. So you have all this cash that UniCredit is generating, basically bolstering the case for Andrew Urschel to say, okay, go spend some money, keep your buybacks. You have the room to do this. Banco Sabadell and BBVA is a completely different story because now Banco Sabadell has the backing, at least in theory, as one option from the Spanish government. And I think this is really, really cool in terms of the fact that the BBVA bid that was really thought of as a done deal, say, 4 weeks ago in terms of the rhetoric, is really now potentially on tenterhooks if the Spanish government doesn't actually pursue BBVA but helps Sabadell pursue a different tie-up.
Anybody but BBVA, as far as I can tell.
Exactly. But look, there are political ramifications in the background here. Banco Sabadell has a massive concentration in Catalonia. That's also where the Spanish government is trying to win some support there as well in terms of their coalition government. So this is quite literally the marriage of politics and banking. Meanwhile, BBVA, the reason they actually initially pursued Banco Sabadell in the first place was they need to reduce their exposure to EM and increase their exposure to Spain.
Bit of diversification. OK, we are 51 minutes away from the market open, 51 minutes away. We think it's not a clock start from this press conference that we're going to be watching in Geneva. We're going to count you down to that and try and give you some analysis as we head for that press conference and the significance of it. You're seeing a big move, obviously, in currencies. As a result of this, the dollar has strengthened. Keep an eye on what is happening, though, with the Japanese currency this morning and what is happening with the yuan as well. Kit Duke, SocGen's head of FX, is going to be joining us very shortly. Miguel Sitwell de Andre is going to be joining us as well, EDP's CEO. We're going to talk about the blackout that just happened. We're going to talk about Trump tariffs. We're going to talk about renewables. Elizabeth Ingleson, London School of Economics, US-China expert. We have a trade expert for you this morning to analyse what is going to be happening and what is coming out of this press conference and what is going to be told by the Chinese side of things as well. Benedict Lowe, BNP Paribas Equity Strategy, she's going to be joining us as well to give us a market take on what is happening here, Kriti.
Absolutely, and really a stellar guest lineup, but plenty of details in terms of the data as well that we've got our eye on. Of course, the geopolitics and, of course, the trade story is going to be front and center. As guys mentioned, we are now 50 minutes and change away from that press conference in Geneva. Then, of course, some commentary coming out of Donald Trump. He is also headed, by the way, to Saudi Arabia today as well, kicking off a tour in the Middle East. We'll see how that all fares. We're going to get plenty of commentary throughout the week. I believe our very own Jumana Bersetchi is on the ground there. But then there is plenty of data, plenty of earnings. U.S. CPI coming in on tomorrow, really. Does inflation still matter if all we're talking about is trade? And we'll, of course, get some of that tariff story, some of that inflation read-through in the likes of Walmart earnings as well. Remember, this is the everyday low prices over in the States. If you want to check on on the retail consumer, whether they're still spending, whether they will be spending in 6 months' time. This is where Walmart earnings really help. And, of course, we get the other data sets as well. Retail sales, UMISH consumer sentiment. This is a check on the American consumer this week.
So that, I think it's really interesting. The CPI may be still too early to show the effect, but you look at the wholesale prices this week, they're going to be fascinating to tell us what is coming down the pike towards us. Also, is the consumer already beginning to retrench? I'm reading article after article about how people are beginning to retrench, kind of consumers that have never had to retrench, generations that have never had to really retrench, having to think about that story. Does that show up in the retail sales? Does Walmart benefit from this, or are we reaching the point where actually the consumer broadly is beginning to pull back? I don't know. Normally you get the trade down story. Is that going to show up in the Walmart narrative as well this week? I think it's an interesting take on the U.S. consumer this week. It's
fascinating because when the tariffs first came out as well, the Walmart CEO, Doug McMillon, had his investor day around the same time. And he actually said that Walmart is going to be more of a price setter in that they're potentially removing things. And we had reporting at the same time from Bloomberg, they're going to remove the price stickers coming out of some of the imports from China. So they have that price flexibility. For Walmart to say that is a very big deal.
Absolutely. We'll keep an eye on this presidential trip to the Middle East as well. There can be some interesting fun and games with 747s. We'll come back to that story maybe a little bit later on. What else do you need to know this morning? Plenty of geopolitical news to focus on. Hamas says it will release the last living American-Israeli hostage, Eden Alexander, still being held in Gaza. The news follows renewed talks with the US in recent days over a ceasefire with Israel. Hamas didn't say when Alexander would be released. Meanwhile, Israel has endorsed a US plan by President Trump for a phased resumption of food distribution to Gaza civilians. The United Nations has warned of a growing humanitarian catastrophe in Gaza due to the Israeli blockade. A ceasefire between India and Pakistan appears to be holding after 4 days of clashes. India says it has fulfilled its objective of eliminating what it calls, quote, terrorist camps in Pakistan, with dozens of suspected militants killed. Meanwhile, Pakistan's military says war between the nuclear rivals would be, quote, sheer stupidity. Tensions has escalated further on Saturday with drone and missile strikes on military sites before both sides agreed to the truce. And President Trump's push for peace in Ukraine is reaching a decisive moment, with Volodymyr Zelenskiy challenging Vladimir Putin to engage in talks in Istanbul later this week. The Ukrainian leader says he hopes this time Putin won't be looking for excuses as to why he can't make it. But if the process remains surrounded by doubts, though, including a demand from Kyiv and European allies that Russia begin a 30-day ceasefire on Monday. President Trump is urging both leaders to talk with or without a ceasefire. We're also getting news as well that the PKK, the Kurdish PKK fighters there apparently are going to be disbanding. This is ending 40 years of a war with Turkey. This is obviously to a certain extent fallout from what we've also seen in Syria.
Certainly a story that we're going to be continuing to keep an eye on. It really is, of course, we have our eyes on what's going on in the trade space, but we have our eyes, of course, on these other conflicts that Guy just outlined as well, in Turkey, in India, in Pakistan, in Ukraine, in Russia, and, of course, in Israel and Gaza as well. Let's talk about what's coming up on the show. Portugal's EDP beating estimates in the first quarter. We're going to catch up with the CEO on their earnings story and what the outlook for the grid system actually looks like, given the latest out of Spain and Portugal. Plus, we'll check in on the pharma stocks at the open. President Trump's latest policies potentially causing shockwaves in the sector. But up next, we're going right back to our top story, those U.S.-China trade talks, as we look ahead to today's press conference with Scott Bessent and Jamieson Greer happening in just over 45 minutes live in Geneva. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg. 43 minutes away from the opening trade. When you look at the futures picture, it is positive across the board, kind of lagging when you look at the FTSE 100, down by about 0.3%. But you are seeing kind of suppressed volatility when it comes to that index. The rest of the market, though, following the U.S.'s lead. When you look at U.S. futures, higher by 1.5%. Some high bar for the press conference we're about to get in about 43 minutes. Let's go there in terms of that top story now. The U.S. and China both citing substantial progress following 2 days of talks in Switzerland aimed at de-escalating the trade war. The Treasury Secretary Scott Bessent says Washington will share details today with the Chinese vice premier, promising a joint statement as well. For more, I'm joined by Bloomberg's Colin Murphy coming to us from Beijing. Colin, walk us through what these talks yielded and what comes next.
Right. So, I mean, there was quite a bit of spin around it, both sides saying that they had made substantial progress. But actually, there's very little details, as we know, and we're expecting that at the top of the hour. So definitely looking forward to that, and that will help us get a better sense of what actually has been agreed. But even saying that, as we speak right now, ahead of that statement, there are things that we can point to that sort of suggest that, you know, there has been some progress, especially when you think about it from the Chinese perspective. So one of the main points, of course, is that the Chinese have been for months asking for a specific sort of interface in the Trump administration who they could speak to and sort of guide their, channel their discussions through that person, confident in the fact that that person will actually have the president's ear. Now, in the decision to set up this mechanism, consultation mechanism, headed by Scott Bessent and also with He Fong from the Chinese side, the Chinese have actually achieved that clarity. So that's definitely a deliverable for them. The actual consultation itself is another thing that we should be considering a sort of an achievement, again, from the Chinese perspective. They're looking for stability, they're looking for predictability, and they're looking for a framework that they can systematically tell their concerns and have the discussions around. So, again, something to be relatively sort of happy with, that they have managed to do that. And then the last point I would say on this is mainly to do with sort of something a little bit vague or ambiguous in the form of sort of mutual respect. So the Chinese have been asking for that for a long time as well. And there have been a lot of sort of gushing on both sides, you know, sort of praising each other for professionalism, so on and so forth. So that suggests that there has been sort of cordial environment and a respectful environment, and that is also important. Of course, the big question is the next steps, and as you say, we'll have that statement, at least the presser around the statement at the top of the hour, and, you know, depending on the details, then the next steps will be decided by that. Will there be a sort of a rollback on the tariffs? Then the dialogue will kick off. All of these things that have been agreed will be the most immediate next steps. But from a sort of medium to long term, there is the issue of stability and there's the issue of trust, which are much bigger issues to resolve.
Colin, thanks very much indeed. Colin Murphy joining us ahead of that press conference, 39 minutes to go. Kit Dukes, head of FX strategy at SocGen, joining us around the table. What are you looking for this morning?
I'm looking to see how far markets want to go on this optimism that this was all part of the deal, really, of the sort of the art of the deal to get tariff levels that are maybe more like the UK ones. So we're not going to get necessarily to 10% in China, but we're going to come back down a long way. It's a completely US-centric view the market's taking. How much does this relieve the fears of US slowdown? I think that's the entire focus. How much the Treasury yields go up? How much does it support the dollar? So on.
How much does it? Talk me through your expectation there for the dollar.
For the dollar, my expectation is we're going to spend probably until the back end of the summer waiting to see what the trade numbers look like, because they're completely messed up, as we know. How much prices go up, how much the US economy slows down from higher import prices at the back end of the summer when goods are flowing in with whatever the tariff levels are, and what the damage is there. So I think that's where I'll get a sense of what an equilibrium of the world might look like. And then we'll see how much enthusiasm global investors have to keep on putting so much of the world's savings into US dollars. And that's the dollar's vulnerability. But I think I'm going to trade, euro-dollar between 115 at the top and 1 something, well, I'm going to find that out quite soon, 110, let's call it for today, at the bottom for the next few months, really.
So if the dollar continues to weaken as kind of a potential base case as well, who benefits? What currency benefits?
I think the European currencies, euro ought to continue to benefit eventually. I think that we'll see the yen continue to benefit. Remember, the yen is the currency which has been most beaten up. But part of the problem is I don't think currency levels matter as much as currency moves and the speed of them. So no one can cope with their currency appreciating at this speed. So that's why we need a timeout. more than anything else. Then I think after that, the yen will appreciate. I think the European currencies should gradually, over time, appreciate.
It's interesting that you're saying that because as we speak, I'm just looking at the board right now, we're seeing strength in the Chinese currencies on the onshore and the offshore ahead of this. But the dollar's stronger against every other currency this morning. How do you make sense of that?
You don't have to try to make sense of the yuan. It's not a free-floating currency. Let's all get our heads around the fact that this is a controlled currency that does what its masters want to do. So I expect it to misbehave. There's been a lot of upward pressure on it in recent weeks that's been kind of trying to stop it going there. A lot of people have been very bearish of it. So if you look at it from the US perspective, people sold the yuan on the idea that they were going to get dreadful treatment in the trade wars. Anything that improves that means that there are people out there who are more short of this currency than they can cope with being.
Goldman Sachs thinks we get to 7.
I saw that this morning.
Yeah.
You know, yes, if President Xi lets it, I think it's
okay.
Stay with it. I think it suits them in their negotiations to let the currency appreciate a little bit right now, for sure. Yeah. I think in the longer run, if you're stuck in fairly serious disinflation or deflation, you wouldn't want it to go very far at all.
What do you make of the move at the back end of the Japanese curve?
I think this is the new future, really. You know, you have to find a clearing level for the long end of the JGB market. It's a bit like the gilt market. If you're going to issue stuff at that end, you're going to find a clearing price, and you're going to.
You don't think we're there yet?
I'm not sure I'm clever enough to know from my days here,
but basically yields are going to go higher.
Yes, I mean, once you're, you know, if you're trying to pull back to it, if you're trying to let the market clear normally, then you'll have to pull yields higher until Japanese people want JGBs more than they want 30-year bonds. Yeah, and we're not there yet.
Okay.
We have plenty of other data points this week. Obviously, this one feels like this press conference feels like the heavyweight there. We have CPI tomorrow. We have Walmart earnings, which I'm a little bit obsessed with, which might give some insight on the trade flow story, retail sales, consumer sentiment, et cetera. Does any of that data set matter in the context of the trade flow?
Yes, it mattered. Well, okay. Those numbers, values matter over time, but what do I learn now?
So they're not tradable.
Yeah, well, you know, the CPI number comes out. Say it comes out low. Apart from shrugging my shoulders and scratching my head, what am I going to do? I think that's my challenge. Is we've messed up the export numbers in the world spectacularly. So we're in a bit of a sort of blind space.
I'm just going to wrap this up here. When you think of the dollar, is it a risk asset? Or is it still have some sort of haven qualities to it?
I think it's switching from having lower haven qualities just because, you know, you can't unknow the fact that we have got $62 trillion worth of US assets sitting on our bank. It's a smaller number now slightly, but still absolutely vast, plus whatever's in places like Hong Kong. Can you be a haven asset when everybody's got all of their money in your haven? Isn't that a risk on its own?
I never thought about it that way. Fair point. Kit Jukes, head of FX strategy at SocGen. The perfect day to have him here talking to us about whether or not the dollar is indeed a haven and how the Chinese yuan and the Japanese yen are likely to react to some of the news coming on the trade front. Coming up on the program, we're going to be talking to the CEO of Portugal's EDP about their earnings beat from last week. Now, this is huge, especially in the fallout from the huge power outage that hit the Iberian Peninsula last week. We're going to have that conversation with him, what that actually means for the likes of renewable energy and how you're supposed to be pricing that in. That is going to be crucial. In the meantime, we are looking at futures that are substantially higher. Euro Stock 50 futures higher by almost 1%, right on the heels of U.S. futures higher by 1.5%. We're about 30 minutes away from that press conference. Stick with us. This is Bloomberg. 30 minutes away from the start of the opening trade. Overwhelming positivity when you look at the futures picture. The word substantial progress really giving a tailwind to equities and I say risk assets all around the world this morning. And we are, of course, 30 minutes away from that press conference from Scott Bessent and the trade representative Jamieson Greer as well, giving us the update on what those talks with China yielded in Geneva. But you can see it. S&P futures higher by 1.6% and the DAX and Euro Stock right on its tail, Guy.
Absolutely. So risk assets are up. Safe havens, let's call bonds safe havens, are down. Unsurprisingly. This is a classic risk-on trade that you're seeing this morning coming through. So the US 10s are up by 4 basis points. You've got Germany up by 3, Italy, France up by 2, 3. Basically, what you're seeing is a risk-on trade coming through into the bond market. I just want to pause and just have 10 seconds on what is happening at the back end of the Japanese curve today. It is quite a big move. Japanese 30 years are basically doing what some would argue the BOJ is not, i.e. raising rates in Japan. This is the stagflation trade basically being priced into Japan. But it will have longer-term consequences were those yields to continue to rise, because it will start to make Japanese bonds more attractive. Money will come back home. That's part of the whole narrative, of course, around what is happening with the dollar. So just keep an eye on that. But broadly, risk on, buy equities, sell bonds. That's the trade of the morning, at least for another 28 minutes.
We'll enjoy for another 28 minutes. In the meantime, let's get a focus in on one of the corporate stories that reported last Friday. EDP had posted a beat in their first quarter net income. The Portuguese utility saying it doesn't expect to see an impact from a temporary split in the Iberian electricity market following the major power blackout at the end of the last month. Lots to discuss. Let's dive into it with EDP CEO himself, Miguel Stilwell de Andrade, joining the program this morning. Miguel, a pleasure to have you. Thank you for making the time for us. Let's kick it off with your earnings from Friday as well. The market already pricing it in as a job well done. Can you just walk us through the numbers and what drove that beat?
Well, first of all, good morning and thanks for having me. So yes, we had a great, very solid first quarter. We had a 19% increase in net income versus last year, and a 6% on the EBITDA also growth. So very strong growth year on year. That was driven very much by the generation and supply business, mostly in Iberia, but we also had very resilient networks business, also growing. And finally, the EDP renewables business was also pretty strong. So the underlying EBITDA growth on the EDP are growing about 20% year on year. So all in all, very strong quarter, good start to the year, and we reaffirmed our guidance also for the full year.
Well, Miguel, in your earnings and, of course, in your press conference as well, you and your company had made the point that you don't see any material impact from the outage that we saw in Spain and Portugal. Can you just walk us through your thinking on that? If it doesn't cause an immediate hit to your bottom line this time around, how can EDP potentially avoid incidents like this in the future?
Well, first of all, just to point out, there was very quick recovery, and I'd just like to take the opportunity to thank all of the teams that worked, very hard to get the power back on. As you know, the root cause still hasn't been identified. We know it originated in Spain. It has sort of a cascading impact throughout the whole Spanish market. It then ended up dragging Portugal down as well. And obviously, we also have very strong operations in Spain as well. So the system collapsed. As I say, it was brought back very quickly within sort of 8 to 10 hours. Typically, people talk about taking 24 hours to restore power completely. In any case, from an economic perspective or financial perspective, we don't expect this to have material impact on the bottom line. What we've seen is basically, we'll have to then find an adjustment together with the network operator or the system operator. But overall, the impact is not expected to be material at all in our results.
Miguel, good morning. It's Guy. Is the takeaway, though, that grids that have higher levels of renewable within them are less stable than grids that have higher levels of gas and fossil fuels?
No, I don't think that that's the conclusion to take. We've operated, or both Portugal and Spain have operated at these levels or even higher levels of renewables over the past couple of years. So there's not a direct correlation. In fact, what I would say, though, is that there is a need for much more interconnection between Iberia and the rest of Europe. We've been pushing on that for many, many years. Iberia is basically an energy island, and so we need more interconnection with, for example, France. We also need more investment in the networks, and again, we've been pushing for that. We've made a proposal to the regulator to increase by about 50% the amount of investment in the networks over the next regulatory period from 26 to 2030. And finally, we need to have a more sophisticated market. We need more batteries. We need more ancillary services so that we can control the network better. That's up to the system operators, so REN and Red Eléctrica, but obviously we are very willing to contribute and to invest in the networks and in batteries and in all of these ancillary services. But I definitely would make that correlation. Certainly the system operators have not made that correlation, and the governments haven't either. So I think the root cause, we still really have to identify it, but that's not really the issue.
Until you know the root cause, though, Is it possible to draw that conclusion? And is it possible also to draw a conclusion that you have visibility on how much money you're going to have to invest? You don't know the answer. We don't know the answer yet. So until we know the answer, how predictable is the business going forward? How predictable is the investment that you're going to have to make going forward? Until we know the answer to that question, presumably we can't.
So as I said, we've been operating at these levels or higher of renewables for many years, and the system, we have a fantastic quality of service, so 99.99% of availability and reliability over the years. We do need to make investments, and this is something that's been identified over time, but that's just a question of modernization of the network. We need to make it, more automated, more digital. We need to make sure it is more resilient. But if you look at our track record, both in Portugal and in Spain, I mean, we have a fantastic quality of service over these many, many years. And so I think this was really an unprecedented, extraordinary event, a one-off, that hasn't been seen over the past decades. Obviously, we're all very hopeful that it won't happen again. We do need to get to the root causes of it. And so there is a commission that has been set up, an independent commission, together with the European, sort of set up by the European Union, together with the Portuguese and the Spanish governments to identify the root cause. But I would certainly think it's premature. So, a couple of different issues have come up, including cyber and others. So let's not speculate too much about the root cause. The system is stable, and we're just focused on making sure it stays that way.
Well, Miguel, given your view on renewables and your confidence around it, how does that impact your approach to the United States, where we know Donald Trump has been less forthcoming in terms of companies leaning into that renewable strategy? Can you just walk us through your U.S. plan there in terms of investment, but also how you may be shaping that investment in light of the Trump administration?
Yes, so, we've been in the U.S. since 2007. We're one of the largest renewable energy players there, at number 5, I think, both in wind, and we've been growing particularly in solar and batteries as well. So, we've gone through the various different administrations, both Republican and Democrat, including the first Trump administration. Obviously, there is more pushback now in relation to renewables, but there is an ongoing discussion and negotiation right now in relation to the Inflation Reduction Act in the U.S. We continue to be confident that the tax credits and basically the tax credits are sort of one of the underpinning of the renewables growth there will continue to be there for the next couple of years. That's been, there's been a very, very strong push by Republicans in both Congress and the Senate to keep those in place. And, if you take a step back, what's important is energy independence. It's affordable energy. It's making sure that it's clean as well to the extent possible. And, renewables has been delivering on that. So we've had very good growth over the last couple of years, over the last decades, actually, in the U.S. And we certainly expect that to be going forward. Just one point, there is a huge growth in demand for power in the U.S. because of digital AI, sort of all the data centers coming up. And the fastest technology to be able to provide that power is definitely renewables.
Would a significantly weaker dollar change your thinking around the United States? We're trading kind of 110, 115. We were just talking to Kit Jukes from SocGen about this. But a move up to 120, 125. Would that change your thinking, and how much of an impact would it have in terms of your numbers?
Well, it doesn't change our thinking in terms of that we think the U.S. is a very attractive market, and about 80% of our investment goes into either Europe or the U.S., and it's split sort of more or less 50-50 between those two geographies or those two regions. So definitely we would continue to invest in the U.S. Would it have an impact? Obviously, a lower dollar will have an impact on our numbers. I mean, it's manageable within sort of our overall P&L. So I think we would still stick to the guidance, even if there was a further devaluation of the dollar within sort of those numbers that you've talked about.
Miguel, sticking with your views on investing in the United States, you mentioned specifically that U.S. tax credits for renewables will actually continue. There's some language coming out this week, I believe, in terms of those extensions of the 2017 tax credits as well. There is, although consensus and largely expected to pass, there is a chance that it doesn't. Have you modeled out that scenario of what your investment in the United States would look like without the backstop of those tax credits?
Yes, I mean, the tax credits, as you know, have been around for over 20 years, and there's also been a stop and go and sometimes some uncertainty around that. I think what the sector generally tends to believe is that the market would then adjust. And so if you take out the tax credits, you have basically the PPAs and the energy prices adjusting to make up for that. As I mentioned, there is a lot of demand for power. If you talk about nuclear, it's not going to be around for the next 10 years or so, even if you started taking the decisions today. Coal, you're not going to have any new coal plants being built. So potentially the only other technology would be gas. And if you ask sort of a gas turbine manufacturer, I'm sure they'll tell you that you can't get any gas turbines before 2030. And so really to bridge this gap, this next couple of years, you're basically talking about renewables, particularly solar, batteries, but also wind. So the thinking is the PPAs would adjust to make up for those tax credits, to make sure that you could still continue to deliver that power.
All right, Miguel, we look forward to seeing how this all unfolds. EDP CEO Miguel Stilwell de Andrade joining the program this morning, walking us through the investment on both sides of the Atlantic. Guy.
Let's talk about some of the other corporate news we are watching this morning. UniCredit has posted first quarter profits that very much topped estimates, strengthening Chief Executive Andrea Orcel's hand as he pursues potential acquisitions. Net income at Italy's second biggest bank in the 3 months to March rose 2.77 billion euros, a record for the company. UniCredit says it plans to increase investor payouts compared to last year. Saudi Aramco has reported a drop in first quarter profit as lower crude prices pressure its finances. Net income fell 4.6% on the year, while free cash flow again failing to cover the dividend despite the total payout being lower. It's the latest sign of pressure on Aramco's balance sheet, even after it decided to cut its annual dividend by around a third. And CATL has started taking orders for its Hong Kong stock offering, which looks set to be the world's biggest listing this year. The Chinese EV battery giant is offering shares at a maximum price of 263 Hong Kong dollars as it seeks to raise around 5.3 billion US dollars. Meanwhile, Bloomberg has learned that CATL is planning to limit US participation to investors with offshore accounts, excluding domestic mutual funds. So this is going to be absolutely huge. It's going ahead. This is a business that is obviously going to have a massive impact in terms of the Hong Kong market. But it's interesting that the trade story is the relationship story potentially impacting US investors' ability to take part in this.
But is this a company that is able to do that because they have the exposure there and are able to get or does this actually open the floodgates to other companies who then follow suit to that part of it, part of the world, at a time when IPOs are not popular anywhere, I would say? No.
Have the Chinese pressured the company to do this? What is this part of the geopolitical story that we need to fold into what is happening here? Clearly, demand for this business is going to be absolutely huge. The Chinese EV market has taken off and is ripping around the world. So I just wonder whether this is just another example of the politics, the geopolitics, and the economics interacting in a fairly big way.
Absolutely. One corporate that we have certainly have our eye on. We'll have a couple of others on our radar as well. We're going to bring you the stocks to watch, including Novo Nordisk, after President Donald Trump said he plans to sign an executive order to slash prescription drug prices. That conversation next. This is Bloomberg.
12 minutes to go until European equities open, cash European equities open. 12 minutes to go. In theory, it's not going to be a clock start. We don't know exactly what the timing is around this. The press conference with USTR Jamieson, Greer, and, of course, Scott Bessent, the US Treasury Secretary. We will be bringing you that live and in full when it kicks off in Geneva. In the meantime, there's plenty of things that we need to be thinking about surrounding these markets as we fold in all of the many narratives that we've got to think about today. Apparently, just one thing has caught Kriti's eye this morning. I know that's not true, but certainly one thing has caught it. What is it?
Well, I think I need to be in keeping with the theme, which is this countdown to the China-U.S. press conference. This is a really big deal, and I think this chart really highlights the conversation we were having with Kit Jukes' SocGen earlier in this hour, which is simply that we don't know, and the dollar trade isn't as clear simply because the data isn't there to support it. So he was really making the argument here that by the end of the summer, you'll actually have the trade flows data to support the argument of whether or not those Chinese exports are actually hitting U.S. shores. And then this is the data that will really indicate when there is that red flag signal. Some would argue that red flag is already there, Guy, because if you look at this chart right over here, this is, of course, going all the way back to early 2024. You can see, of course, the data has been quite choppy from here on out. But you come all all the way to the recent history, take a look at what's happened since Liberation Day. A massive drop in those shipments from China to the United States, only to recover just a little bit. Now, I was trying to rack my brain, I should say, this morning about what was actually driving that recovery. Is it the optimism? Can you actually bring in shipments that quickly when there is this kind of volatility around the headlines? Guy, I don't have the answer to that, but what I do have the answer to is that this is a data set that everyone wants to keep their eye on, and perhaps the very first data set that's going to be ringing the alarm bells in terms of some of the damage and the carnage that these tariffs are going to be doing. Yeah,
as you pointed out earlier, though, it's going to be things like Walmart this week are going to be really fascinating kind of points in all of this as well to watch out for. Walmart has huge visibility on what the trade story actually looks like. So we're 10 minutes away, let's call it 11 minutes away from this press conference. As I say, we don't know the exact timing, but we are now anticipating that it will be within the next few minutes. On tenterhooks very much, our Markets Live executive editor, Mark Cudmore, who joins us now in the run-up to this event. Mark, what are you looking for? What does the market need to hear from this update that is apparently going to give us some details on what substantial progress looks like?
I can only assume the first reaction will be positive just because of how they'll sell it. Look at the way we're talking about it. Look at the expectations out there. Scott Bessent is not stupid. He wouldn't have announced there is substantial progress, to use his words, and been excited to have this press conference. Both sides agreed there was real progress made unless they could, herald some great headlines today. Now, the problem is we're not expecting many concrete things to have actually been signed. It's more going to be about an aggressive framework for how they kind of make progress. But it might include the suspension of the really aggressive level of tariffs so far. So I expect that no matter what they sell now, they're going to sell it as a win. That's what they've already teed us up for this press conference. So the headlines that come out of this conference are probably going to look very, very positive. We're going to get another big bump in stocks, despite the fact we've already seen a bump today. Now, the question is what happens next? As I said, this is only the first step. Everyone agrees that, and they can't necessarily sign many, serious deals. What they can do is maybe suspend some of the previously imposed things, but they can't get significant progress. We're likely to end up in a world with much higher tariffs than we had a couple of months ago. Now, the question is, how quickly do we go to kind of studying the real final end game and how quickly we get there and what the concrete terms are? Could that happen within hours? Could it happen within, days? Could it happen within weeks? I'm not really sure. I will just point to one thing. Last week I talked about turning proactively bearish again after believing in the relief rally up until last week. And I said that, the Tom DeMark technicals were saying one more closing high. We haven't had that closing high yet. Maybe we get it today. Maybe it's tomorrow you start trading the bearish scenario. But I've got to wait to the details from the press conference.
Mark, walk us through the positioning story here, especially going to the fact, as you point out, that we don't actually know. Is there a line in the sand that currency markets in particular, I'm thinking of dollar investors, are actually positioning for? If we get, say, an 80% level, does that create some sort of response in one direction or the other?
No, I'm not sure that there is such a binary level because, again, it's about what the long-term end game is here. I think if they talk about a major reduction, it doesn't really matter where they go down to. I mean, 80% is still ridiculously high, but if they talked about that, it'd be a real positive. They might go even lower. Either way, it's those headlines that will be seen as a positive in the short term that'll see the dollar recovery, the kind of a temporary squeeze of the sell America trade. But longer term, we're going to care about the implementation. And as I said, it might just be a suspension of temporary elevated tariffs. So I don't think there is one kind of binary level here. I think that, you talk about positioning, I think there's two different time spans here. That the shorter term market has got short the dollar, been looking for ways to play the dollar, a little bit squeezed from that trade, but still in that position. But structurally, the world is still deeply long dollars. So I'd say that the weaker positioning in the short term is that short dollar position. But at some point, if there's a squeeze higher in the dollar, there are big long-term hands ready to sell into it aggressively. And I think that's the same situation for US stocks as well.
All right, Bloomberg Markets Live executive editor Mark Cudmore joining the program this morning. You get more up-to-date analysis from him and the team. MLIV is the function on your terminal. Let's go from the macro to the micro and get our stocks to watch with Joe Easton. Joe.
Morning, Kriti. So we've seen some big moves in the Asian pharmaceutical stocks overnight on news that Trump potentially going to be looking to rein in prices as he had warned of before, potentially looking to use a system where Americans pay the lowest price that is available in other countries, saying that potentially that could reduce prices by up to 80%. Look at these moves in some stocks over in Tokyo, Australia, South Korea, pretty much everywhere we saw drop downs in these equities, and we're expected to see a move in the European names today as well. As usual, AstraZeneca, Novo, Sanofi, Roche, all of those potentially going to be in focus once again in European trading. So Pharma really in focus this morning. Then the other sector I've got my eye on is the commercial aerospace sector, because the US announcing late Friday that they are looking at a probe into pricing and the imports of goods from the EU in commercial aircraft. Morgan Stanley writing in a note that this is actually a contrast to what the market is expecting, because the market has actually been predicting that tariffs could actually be lowered on the sector. So therefore, we're going to keep an eye on Airbus today, also suppliers in France, Safran, Thales, maybe MTU in Germany as well. The ones here in the UK potentially not going to be as impacted, given we had news of that recent trade deal last week. Then the other single stock to watch, UniCredit, we're looking like the earnings beat across the whole expectations for that one. And potentially that one's going to be stronger today. Keep an eye on UniCredit in Milan this morning.
Joe, thanks very much indeed. The press conference we think is about to start in Geneva. I can show you a live shot of the pictures that we are getting. We are going to bring you this press conference live and in full as it kicks off. We think it's going to start in the next few minutes. Timing is a little bit flexible, but as soon as that begins, we are going to bring it to you live. This is Bloomberg. Monday morning, good morning. This is the live shot. We're getting out of the Intercon in Geneva, the Intercontinental Hotel in Geneva. Scott Bessent, Jamieson, Greer, the USTR, are about to brief the Treasury Secretary. Obviously going to be listened to very, very carefully. Both are going to be listened to very, very carefully in terms of the readout they're going to give us. They're going to give us details about what substantial progress absolute means, and the market's on tenterhooks. This is the picture coming out of Friday, so in some ways a little irrelevant. We were obviously watching the talks into Friday. US markets kind of drifted sideways into the weekend without a clear catalyst, waiting for what was going to come out of Geneva. We're about to get more details on that, so the futures picture probably more relevant right now in terms of what it tells us about how the market feels. And as you can see, it is a very much risk-on trade. So European futures, you're looking at the stocks 50, the DAX, both up circa 1%. S&P futures are up circa 1.6%. So it's very much a risk-on move into stocks, out of bonds, Kriti.
Absolutely. It's fascinating what we're going to see on the index level, as you say, bracing for that commentary. In the meantime, a couple of micro stories to keep your eyes on that may get factored into the narrative. Some of that's pharmaceuticals, some of that is banking. Remember, Donald Trump expected to make an executive order at 9:30 a.m. Eastern time today when it comes to drug pricing. This is going to be crucial when it talks to some of the European pharmaceutical companies that operate in the United States. Is this step one to some sort of kind of impact when it comes to tariffs and bring those prices down? Of course, banking very much in focus as well. UniCredit announcing record profit, really giving Andrea Orchel the backing he needs for those acquisitions. Spanish banks, on the other hand, Banco Sabadell, getting perhaps a little bit more support from the Spanish government versus BBVA Guy. But right now, all eyes on that presser in Geneva.
Absolutely. So the press conference is about to start. We don't know exactly when. It could be now, it could be in 2 or 3 minutes' time. So in the meantime, let's just talk about what we're seeing in terms of the risk-on move that we are getting here in Europe. We are anticipating that European stocks go up by, let's call it circa 1%, just maybe a little softer than that. We are going to see potentially, though, some quite significant divergence in some of the sector narrative that we are watching carefully, because you're going to see the pharma stocks, Kriti, under significant pressure. We're up by around 0.6%, but some breaking news already on the trade story.
Absolutely. Redheads crossing the terminal from both sides. China to lower tariffs on U.S. goods to 10% from 125, but only for 90 days. That's the line out of China. Out of the United States, they're looking to cut tariffs on Chinese goods to 30% from 145% for 90 days. We are still waiting, again, for that press conference for the full details from this, from the Intercontinental over in Geneva. That's what we're waiting for when the commentary comes out of Scott Bessent, the U.S. Treasury Secretary, as well as U.S. Trade Representative Jamieson, Greer. At the same time, We're going to get the, I believe, Chinese, Foreign Ministry making some comments as well. But these are some massive numbers for 90 days.
So the figure was, we were worried that it would be 80%. That's what Trump pointed us to on Friday. We are way below that number. So in some ways, Scott Bessent, you could argue, has delivered a big win for Trump. Trump wanted this he wanted a win. He needed progress. He told us to buy stocks on the back of it and told us that that was coming. So we are starting to see some of the commentary coming out. Scott Bessent, the press conference hasn't actually started yet, but just a few moments ago, officials handed out a sheet of paper which clearly had some of the details on it. Bessent says that neither the US or China want to decouple, which is quite significant. So that is a fairly positive story coming out of this. But the details appear to be that we are going to see a substantial reduction in the tariff level that we are seeing both out of China and out of the United States. You're getting a market reaction to it, as you can see. It is interesting to see that the dollar is moving down against the US dollar. But in terms of what we're seeing elsewhere, S&P futures spiking sharply higher on the back of this. And in terms of the European market open, we've now got the Euro Stoxx 50 up by 2%. The FTSE is something of a laggard. The CAC 40 is up by 1.3%. The DAX is climbing, now up 1.5%. The FTSE MIB is up by 1.8%. So some big gains coming through. There is an area that we are focusing on, which is the pharma stocks. But in terms of that's not the story right now. The story right now is this big risk-on move that we are seeing as we see a substantial reduction in the tariff level for a limited period of time.
Massive across the board. Scott Bessent, according to these remarks, saying neither the U.S. nor China want to decouple. In the meantime, we're also seeing comments coming from the Chinese Foreign Ministry, spokesman beginning their briefing. So we're still waiting for the U.S. In Geneva. We are getting, however, headlines coming out of China. They're releasing their white paper on national security as well, according to Xinhua. But I think that's a key point, because you mentioned the equity story, you mentioned the bond market story, you mentioned the currency story. Oil now at almost $66 a barrel for Brent crude, really highlighting the growth concerns that were coming out of this. It looks like China reiterating what Bessent has saying in terms of not wanting to decouple, saying they're committed to the stability of Sino-U.S. relations. Now, as we await that commentary, let's get a little bit more analysis, if we can here, from Elizabeth Engelson, the assistant professor of international history at the London School of Economics, but also an expert on those U.S.-China relations. Professor, talk to us a little bit about that immediate reaction there. These numbers for 90 days, not too shabby.
Not too shabby at all. I mean, they were real. I mean, I think a lot of people came into these negotiations with very low expectations. Trump had, over the weekend, set a set of expectations around 80%, but these are significantly lower than those expectations. So I do think that this is a really positive sign. But it's also important to keep in mind that 10%, 20% are still very high tariffs that in the rest of the world were what caused sort of the Liberation Day panic. So I think we're coming from a very low base, and that is the most significant shift, I think, that this is indicating real change in the US-China dynamic.
Is the 90 days significant? Like, should we worry about that? Is this... 90 days is a fairly decent period of time to get something at least sort of to get progress on some key areas. Is that enough time? How should we think about those 90 days?
It's a fairly standard amount of time, actually. It's not, I don't think it's anything to be worried about, but I think what it indicates is a real willingness now to continue the negotiations, to continue to work towards a more sustainable way of trading between the United States and China. So this 90 days gives that buffer, but the fact that it's coming at the tariffs are much lower than expectations indicate real potential for progress.
Talk to us about the sustainability of those 90 days, because this 145% was supposed to be for 90 days. Now we've seen it peeled back. Is there a chance something like this ratchets back up?
There's a real chance of that. And I think this is something also to keep in mind, the fact that both the United States and China couldn't even agree to who it is that initiated the conversations or the need to meet in Geneva in the first place. There is real underlying tension between the two countries, even as we have today a real signal of a willingness to work together. And this really is a signal of that willingness.
OK, Scott Bessent is speaking. Let's take a listen to what he has to say.
Government for facilitating this trade meeting here in Geneva. We had very productive talks, and I believe that the venue here on Lake Geneva added great equanimity to what was a very positive process. We have reached an agreement on a 90-day pause and substantially moved down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down 115%. We had very robust discussions. Both sides showed great respect. It was a chance for me to meet the Chinese delegation. The vice premier I had previously had only a video call with. Ambassador Jamieson was familiar with two of the other leaders on the delegation from his previous time. So there was very good personal interaction. Both countries represented their national interests very well. We concluded that we have shared interest, and we both have an interest in balanced trade. The U.S. will continue moving towards that. I will let Ambassador Jamieson talk about the President's initiatives that began on a historic announcement, trade announcement on January 20th, which no other president has ever done, following to April 2nd, when we implemented the reciprocal tariffs.
Thank you, Secretary, and I will echo your thanks to the Swiss government and Swiss officials for hosting us this weekend. The atmosphere was very conducive to discussions, and thanks to them we were able to have very constructive and positive conversations with our Chinese counterparts, who clearly came to deal this week. The rapid nature that we were able to conduct and conclude these discussions is a testament to mutual understanding and mutual respect between the Chinese and U.S. sides. With respect to the U.S. Trade position, our interactions with China, and the agreement today, please keep in mind that the United States trade deficit has ballooned over the past several years, ending up at $1.2 trillion deficit in goods as of the end of last year, which was an approximately 42% increase over a few years prior, when there was an $850 billion trade deficit at the beginning of the Biden administration. So that is a rapid and expansive increase in the trade deficit. And our view is that this is driven in large part by non-reciprocal trade, among other things, and the result has been offshoring of manufacturing and other negative impacts on the U.S. economy. And so on January 20th, when the president was inaugurated, he released the America First trade policy, which was comprehensive and flagged that and actually directed agencies, including U.S. Trade Representative and others, to research this issue and to provide options, which we did, and the president elected to impose reciprocal tariffs on April 2 to address this national emergency of the trade deficit. There was a global baseline tariff accompanied by higher reciprocal tariffs for each country depending on the level and intensity of their trade surplus with the United States. In all of this, China was assigned a reciprocal tariff rate of 34%. China was the only country that chose to implement retaliation against the United States for this reciprocal tariff. All other countries withheld and decided that they wanted to negotiate with the United States or simply not retaliate. And so we've been in detailed discussions with other countries for several weeks at this point. China, as you know, retaliated not only with tariffs but with disproportionate and asymmetrical non-tariff measures in order to maintain the effectiveness of the reciprocal tariff measures. The president increased our tariff rates to offset Chinese retaliation. And as you know, this escalated to a point where both sides had added 125% tariffs, and with the Chinese side, additional non-tariff measures, amounting to an embargo in some senses on trade, an effective embargo, which of course was not a sustainable practice for either side. And so today, with this agreement, we come to agreement that that our reciprocal tariff rate will go down to 10% on the United States side, so it goes down 115%. We enter into a 90-day pause period for negotiations, which both the Chinese and the United States are very committed to. And the Chinese on their side also go down 115% to 10%, and they remove the countermeasures that they have in place. To be very clear, other measures that the United States has put in place in the past, whether it's tariff measures from 2018 or since, tariffs under other statutory authorities, tariffs related to fentanyl, those remain unchanged for now to the side. I'll just make one point, is that both the Chinese and the United States agreed to work constructively together on fentanyl, and there's a positive path forward there as well.
Okay, great. So let's start with some questions.
Well, just if I may make a few final remarks to give you framing and context. I think throughout the trade process, we have had a plan, we have a process in place, and now with the Chinese, after this weekend, we have a mechanism for continued talks. So process, plan, and mechanism. I would say one of the big takeaways from this weekend, the United States will continue a strategic rebalancing in many areas that were exposed as supply chain weaknesses during COVID, whether it's medicines, whether it's semiconductors, steel, the other, we've identified 5 or 6 strategic industries and supply chain vulnerabilities, and we will continue moving toward U.S. independence or reliable supplies from allies on those. But the consensus from both delegations this weekend is neither side wants a decoupling. And what had occurred with these very high tariffs, as Ambassador Greer said, was the equivalent of an embargo, and neither side wants that. We do want trade. We want more balanced trade, and I think that both sides are committed to achieving that. We would like to see China open to more U.S. goods. We expect that as the negotiations proceed, that there will also be a possibility of purchase agreements to pull what is our largest bilateral trade deficit into balance. That has gotten out of balance, and much of this has happened through neglect over the past 4 years, as the previous administration did not engage on this issue. That was put forward to us by the Chinese, in fact, and we can see it in what happened to the Phase 1 agreement. We are only looking forward, and we look forward to very good discussions now that we have the mechanism created in Geneva this weekend for talks.
Great. And with that, let's kick off questions. I'll start at the front row. Jenny, Leonard Bloomberg.
Thank you so much. Going into these talks, the president posted on Truth Social that he believes an 80% tariff on China seems right. It obviously went down substantially more. How did you end up going to 30%? Was that the president pushing you, or the Chinese not budging before you went down? And then secondly, you have a 90-day pause now, as you have with other countries. What specifically do you want to see in those 90 days? What kind of progress do you want to see in those 90 days and have agreed to by then to not ratchet up the tariffs? Because it is just a pause, right?
Yes, so
the tariffs then snap back, basically, if you don't have something agreed upon that is substantive.
So the Chinese April 2nd number was 34, continues to be 34%. I'll let Ambassador Greer answer the first question. And just like with all our other trading partners, as long as there is good faith effort, engagement, and constructive dialogue, then we will keep moving forward.
I would just say, Jenny, with respect to, the president's message and ultimate rates, I mean, everything is a negotiation, right? And the president, he gives the Secretary of the Treasury and I and other members of the cabinet direction and advice on how to proceed. And we ended up at a result that is very good for the United States, very good for China as well. We retain our 10% global baseline tariff, which we have on other countries. We have, in addition to that, previous measures that we've retained, which have been, frankly, effective in reducing the U.S. bilateral trade deficit with China over the past few years. So that leaves us in a very good position all in with respect to measures on Chinese imports, but more importantly, leaves us in a constructive path forward to have a positive conversation with the Chinese on how to rebalance and have more constructive trade.
Great. In the back, Associated Press.
Associated Press. Hi, I'm Jamie from Associated Press. We just heard our colleague talk about 30% tariffs. I'm just trying to understand these numbers here because they're all over the place. We were at 145 before, apparently, and 125, I believe, from the Chinese side. So can you say clearly now that, I think the question was, right now for the 90-day period, the U.S. tariffs on Chinese goods will be down to 30%. Is that correct for the 30?
So again, this agreement is really about the reciprocal tariff, which was imposed by the United States on April 2nd, and the escalatory steps which followed. Those on each side, the Chinese side and U.S. side, ended up at 125% on each other. The Chinese had additional non-tariff countermeasures. That has all come down by 115% to 10% each. The United States earlier this year imposed 20% related to fentanyl. That still exists. So if you're looking at Trump Term 2, tariffs on China, right now effective, it's 30%. There are prior measures which change by product, by sector, by level, et cetera. You can't really give a specific number on that right now. What matters for the agreement today is that we each agreed to come down on the reciprocal tariff and related retaliation to 10%. So a reduction of 115% down to 10%. Fentanyl is on its own track, but on a very positive track where we're having very constructive conversations with our Chinese counterparts.
And I would add a couple of things. This does not include any sector-specific tariffs that have been put across all of our trading partners. And as the ambassador said, I think he would agree with me that the upside surprise for me from this weekend was the level of Chinese engagement on the fentanyl crisis in the United States. They brought the Deputy Minister for Public Safety, who is not traditionally part of the trade team or the negotiating team, and he had a very robust and highly detailed discussion with someone from the U.S. National Security Team.
Great. Next, John Huddy with Newsnet.
Mr. Secretary, will there be any immediate impact that U.S. consumers will see from this? And what was the toughest part of the talks? The Chinese are, notorious for being very difficult negotiators. Was there any moment that you felt the talks could break down? And as far as the fentanyl, I'm sorry, I know there's 3 questions here, but what are the Chinese willing to do in terms of the fentanyl crisis? Did they make any promises or any agreements to combat fentanyl?
Okay. Well, there's a lot to unpack there. So let me recap that. So you're asking U.S. consumers, the last one was fentanyl, and what was the second question?
The toughest part of the negotiation.
Well, I'll start there first. Both sides represented their national interest well, but we also concluded that we had shared interest and that neither side was interested in a decoupling. And again, a lot of back and forth on various differences in views on fair trade. We informed them, I had a discussion, that trade deficits are a result of three things. One, terms of trade. Two, currency. And then three, the United States fiscal position. We informed them that Trump administration is working very hard on containing this out-of-control fiscal deficit that we inherited from the previous administration. Two, there was no discussion on currency. And one, it was on terms of trade. And on fentanyl, again, for the first time, there was engagement between two teams with detailed knowledge. And I think for the first time, the Chinese understood the magnitude of what is happening in the U.S. In 2018, in Buenos Aires, they did a good job of banning the actual fentanyl. But what we have seen is substantial interaction between bad Chinese actors and many North American drug dealers, especially Mexican cartels. Treasury has designated several of the Mexican cartels as foreign terrorist organizations. We made that clear to the Chinese. They were very receptive. As you may or may not know, the Chinese have very draconian measures for the sale of illicit narcotics in China, and we have asked them to be equally as draconian with the people who are poisoning Americans.
And let me make a point. Your question about what was the toughest part of the negotiation, I would submit it was actually, in the lead up to the negotiation, trying to repair the channels of communication that had atrophied under the last administration, where, our office, for example, the Office of the United States Trade Representative, had almost no substantive discussions with the Chinese side on trade. And although we have significant differences with the Chinese on trade and economics, and we have major complaints, you have to discuss these complaints. You have to have a channel for discussions, and overcoming that was a substantial challenge. And a lot of work went into that over the past several weeks, so that by the time we got here, we were able to be very pragmatic with each other. And to be sure, there were tough things to deal with on the level of removal, the timing for implementation, managing each side's domestic politics, et cetera. And I won't go into too much detail. But I would say the toughest part was simply getting to a position where we could, in good faith, both sides work with each other. And once we did, we were able to do this in a couple of days. This is not the first time I've done trade negotiations with the Chinese, and sometimes it can take a very, very long time to overcome misunderstandings. We were able to do that effectively over the past few weeks, which enabled us to be very pragmatic and effective this weekend.
And I think we leave with a very good mechanism to avoid the unfortunate escalations as we saw after April 2nd from happening again. What had been very unusual about the relationship was that President Trump, Party Chairman Xi, they have a good relationship, but that the nature of what has happened since April 2nd could have been avoided if we had had this kind of mechanism in place, and I believe it is in place now. I think we leave today with a process that will move forward, and again, great mutual respect for our Chinese counterparts. I believe they showed us the same.
And the impact on U.S. consumers? Will U.S. consumers see any resulting result out of this?
I mean, Mr. You're the Treasury Secretary, so you're better suited. But I would say on the front end, there's been a lot of talk about impact on consumers that just never really translates to the numbers. Consumption remained high, et cetera. And so I think what we're going to see is that we're going to have our economy continue taking off as we put structure around these negotiations and get global trade into a better place.
And as I reiterated last week, the Trump economic plan is 3 pieces: trade, tax, and deregulation. Trade has been implemented first, and that process is occurring. We believe that the tax portion is going very well. Speaker Johnson, Leader Thune, who I am in constant contact with, believe that midsummer we will pass, as the president likes to call it, his one big beautiful bill, and we believe that that will provide substantial relief for American households. And then deregulation, a hidden and pernicious tax on American households, is regulation. We believe that the last administration added several $1,000s a year to American families' cost, and that we will be not only cutting those substantially, rolling that back, but cutting those substantially.
Thanks. I think we have time for about maybe 2 or 3 more questions. The most, sorry, ma'am, name and outlet, please.
Yeah, it's Imogen Folks, BBC. It's very heartening what you're telling us. I'm wondering whether you think it might have been a better idea to start at this point of negotiation rather than start with a big list of tariffs and all the global turmoil that caused and the fear, frankly, in some countries around the world. How about, do you think with hindsight it might have been better to start, reach out and say we want to talk to you guys about this?
No, I disagree entirely. We have spent decades at the World Trade Organization in multilateral and bilateral negotiations trying to get other countries to reduce their tariffs and non-tariff barriers to be more reciprocal with the U.S. We've had one of the most open economies for decades. The promise of the WTO and the multilateral system is that everyone was going to come down. It turns out the U.S. went down significantly. There were other economies that had low tariffs as well, but retained very high non-tariff barriers. We have tried really hard to work within the system, and the net result is a $1.2 trillion deficit in goods. The net result is manufacturing went to China, East Asia, Mexico, et cetera. So we've tried all of that. So the idea that we can just keep saying, well, why don't we just talk a little bit more and we'll have a different outcome, I think just is totally detached from reality.
And I would add a couple of things, that as our 18 important trading partners come to us, many with very good deals, as the UK, who skipped to the front of the line as our oldest ally, as Ambassador Greer and I look at their proposals, again, to lower tariffs, to lower the non-tariff trade barriers. Obviously, UK does not have a currency manipulation problem. And the subsidies for labor and industry, we look at these, and I think, how did we get here? How did we get here? And I echo part of what President Trump said, that he doesn't blame the other economies for taking advantage of a fluid, taking advantage of the situation when they were allowed to do it. He blames previous U.S. leaders. So we are just trying to restore a healthy equilibrium. That the U.S. economy has become very unbalanced. On one side, we have a forward-leaning, the deepest and widest financial markets in the world. We have financial innovation. We have the tech sector that is the envy in the world. On the other side, we are a natural resources economy led by energy. So it is a barbell, but in between, precision manufacturing, especially precision manufacturing, has been wiped out, and it is our intent to bring that back. So we want to rebalance, and I think that there is a big opportunity. If I think about this weekend, the Chinese, they have gone the other way. They are unbalanced in terms of overproduction in the manufacturing sector. They have stated, but have not yet rebalanced toward a more consumption-oriented economy. And there is a chance, if we can open up trade to China, have more fair trade toward the U.S., that we could rebalance together. So I reject the notion that business as usual would have worked.
Great, and I think this will be our last question as we're just about out of time. Swiss outlet, Greer with Wall.
Yes, I have a question with regard of the setting of these very successful talks as we hear. Switzerland has been in the center for international conferences for many decades. In recent times, we've been under tremendous pressure. The ambassador of Joe Biden to Switzerland called Switzerland the hole in the donut. My question is, how high does your administration value reliable Swiss neutrality for conferences or meetings as we just witnessed this weekend?
Well, I won't speak for the previous ambassador. My neighbor in Charleston, South Carolina, is the ambassador under President Trump, Ambassador Ed McMullen, who was highly respected here. He continues to engage with the Swiss American Foundation, and he has led this administration's effort to re-engage with Switzerland after the past 4 years. So we value the relationship. I believe Switzerland is now one of maybe the sixth largest investor in the U.S., which is incredible for an economy with 9 million people. We hope that Switzerland will bring some of its very robust trade training programs to the U.S. as we re-engage the manufacturing sector, because I believe the U.S. has a lot to learn from Switzerland. And again, the U.K. and Switzerland have moved to the front of the queue for the trade deals, whereas the EU has been much slower. So we value that also.
And I would say, with respect to the negotiating dynamics, and this may not seem important to those not involved in this, but the atmospherics provided by the Swiss government were incredibly conducive to the conclusions we had this weekend. They allowed us to use the grounds of the residence of the Swiss ambassador to the United Nations, which had a very intimate internal rooms, and importantly for us, where a lot of the key negotiations happened, were outside under a large, beautiful tree on a set of patio sofas, frankly, where we had the most important discussions on the most challenging issues. And having this setting, as opposed to, no offense to the Intercontinental, which has been great, as opposed to a sterile hotel conference situation or conference rooms, I think let us develop a personal relationship with our counterparts and lead to the successful conclusion we had.
Great. Thank you so much, everyone. I think that's it for us in time today. Thank you so much for coming out. And thank you.
We're concluding the press conference in Geneva at the Intercontinental Hotel in Geneva. The Treasury Secretary Scott Bessent, the USTR Jamieson, Greer, updating reporters on the result of the talks that we saw between the US and the Chinese officials over the weekend. The market reaction has been swift. We have seen European equity markets gapping higher. This news came across as we opened the market this morning here in Europe. As you can see, the stock 600 up reasonably sharply. There is a takeaway, a little kind of deduction you need to make from this, and that is what is happening in the pharmaceutical sector. We'll come back to that a little bit later. But at the moment, you have the German DAX up by 1.5%. Chinese equities also responded to this. The FTSE 100 is only up by around 0.5% at this point in time. So you're actually getting quite significant divergence here in Europe. US futures do look like this morning, as you can see, sharply to the upside. They were already up. We have added to that move this morning. This is a risk-on move that we are seeing. So while equities go up, we are seeing bond yields coming under pressure. The US 2-year is up by 8, nearly 9 basis points. The Swiss 2-year seems germane, up nearly 9 basis points. The safe haven sort of status of that market, obviously, in focus. The front end of the German market is moving quite significantly. So you're getting a big kind of risk-on move into equities. out of the bond market, Kriti.
Absolutely. Well, the positivity continues when it comes to the FX space as well. If we were concerned about more dollar weakness, that is not the story today. Take a look at Eurodollar, for example, 111 there. We did hear Scott Bessent talking about how the EU is falling further back in the line, the UK and Switzerland moving forward. I think that's the go-to currency to look at in terms of those comments. But we have to go back to the Asian piece as well, because dollar yuan, the offshore yuan, at 720, and the Chinese yuan actually appreciating against the dollar. And I think that's crucial there. Meanwhile, you are seeing the dollar appreciate against the Japanese yen as well. So 147 on dollar yen, 720 on dollar yuan. A lot to digest there. Let's talk about the commodity picture as well, because if you're concerned about growth, the first place it's going to show up is in that oil sector. We're looking at a 65 handle on Brent crude, continuing to rise higher by about 2.8%, and a VIX that briefly, emphasis on briefly, dropped below that key 20 level for the very first time since Liberation Day. So positivity across the board. I'll even throw a little bit of gold in there. Yeah. Down about just shy of 3%. Yeah,
it was down around 2% going into this. We've seen that move continuing. Let's carry on the conversation and provide you with some analysis as to what we have just heard. Elizabeth Ingleson is Assistant Professor at the Department of International History at the London School of Economics, a trade expert. Benedict Lowe, Equity and Derivatives Strategist for Europe at BNP Paribas Markets 360, joining us around the table as well. Professor, let me come back to you. Just give me your takeaway. What you just heard, what does it mean? Walk us through the significance of what has just happened.
Yeah, it's been really interesting. I think what we're seeing from Scott Bessent, first and foremost, is a real attempt to take the tension, to diffuse the situation, and to start to normalise the dynamic a little more. He spoke about process, he spoke about plan, he spoke about sort of having mechanisms in place. And that tells us something about the direction that he and certain members of the Trump administration want to take things into. But it's really important to keep in mind just how volatile things still are within the Trump administration. So it's significant, for example, that it was Scott Bessent calming things and really taking things in a particular direction, and that someone like Peter Navarro, for example, another key trade advisor of Trump, wasn't involved in the talks in Switzerland and hasn't been involved in this dynamic. So we're seeing a real push on the part of Bessent to sort of diffuse tensions and normalise relations with China. But it's important to keep in mind that it's sort of papering over a much deeper, I think, set of tensions within the Trump administration that we will still see unfold in the next 90 days, if not sooner.
Well, the papering over is very much working for these markets. As Guy and I just laid out, risk sentiment is on and exacerbating what we already came into that presser with a lot of optimism built in over the weekend. Benedict, come on in here. How sustainable is this optimism that we're seeing? You just heard Elizabeth there talk about throwing a little bit of cold water on the sustainability of this deal. What about the sustainability of these gains?
Yes, I would start by saying this is, first of all, a material de-escalation. I think that was much better than what was expected by the market. And I think that it really matters from a conviction standpoint. The rally that we saw after the post-Liberation Day sell-off was a low-conviction one. And what I mean by that, it was mainly driven by systematic strategies, such as vol target or CTAs. The more discretionary part of the investment were kind of stayed on the side, especially in the US. So that will bring a bit maybe more breadth, but also just on the fact that systematic strategy has still room to re-leverage on that. So on the back of a positioning angle, there's still more to go. There is a point where too much positive news is priced into the market, and maybe there's a moment where we want to take the reversal trade, but at the moment, over the next few days, I would expect a bullish environment to be in global equity markets.
Money's coming out of the United States. Does it go back into the United States as a result of this?
Yeah, so we've seen this kind of switch from there is no alternative to there is an alternative with Europe that's benefited from that at the start of the year. We estimate that over the past 10 years, there's over $2 trillion that was invested from European investors into US equities. And we think that now there's a growth alternative in Europe. There's a German fiscal stimulus package that is there. Some of that money could be reallocated into Europe. Even if you say 10%, 20%, we're talking about 200.
Does that limit US gains, therefore, on the market?
It limits potentially US gain, but also offer alternative opportunities for Europe that can kind of take the lead in terms of performance.
Benedict, what's the red herring there in that situation? You talked about a bullish environment over the next few days. You talk about these kind of fund flows re-entering the United States. What for you is the red flag that spooks you?
I think the red flag is too much positive news getting priced in, so kind of equity market going back to their year-to-date highs in the US, and the pocket actually where we are a bit more cautious and where we like to hedge at the moment in the US is the Russell. They have low pricing power, they're more sensitive to higher rates, so this is kind of the area where we would say if you want to hedge, go into the Russell. Maybe not the 5E, maybe not the S&P after the good earnings we had on tech sectors, but the Russell is the pocket where if too much positive news priced in, this is where we want to hedge.
Is 30% still a big number? Is 30% sounds really good right now. It's a lot better than it was before, but is it still a too high a number for small, medium-sized businesses in America? You talk about the Russell. Is that where we sort of see the pain shoving up first? I spent my weekend reading piece after piece about a small business owner here and a small business owner there that used to import a lot of stuff from China. 30% still sounds, I suspect, quite a big number, and the US consumer's already retrenching a little bit.
I think it's still a very material number, but I would say we're coming from such high numbers that were so punitive on the economy that just this has to be in the short term a relief rally. If those numbers comes in and if we stay there and there's not a re-escalation, because that's always a risk that it's a 90-day pause, we don't know what will happen. There's going to be a volatile environment, that's for sure. But if we stay there, there has to be risk on at the moment in equity markets.
Okay.
Benedict, we have to leave the markets conversation there. We're going to dive into the policy in just a moment. But equity and derivative strategist for Europe at BNP Paribas, Marcus 360, joining us this morning. We thank you so much for the immediate reaction on some of this optimism. Let's stick with the conversation when it comes to the policy. Elizabeth Engelson still with us from the London School of Economics. I'll put the same question I just put to Benedict to you. What is the red herring here? What spooks you?
One of the things I think that's really important is to think about the long-term structural changes happening. So yes, this is a deal that or an agreement that is coming from very, very low expectations, and that is something to really hold on to, right? This is indicating a willingness on both parts to negotiate and to try and sort of find a way forward. But I think the sort of bigger sort of concern for me is the long-term changes happening in the global economy. So in many ways, China has already, for a number of years now, been moving the structures of its economy and its trading dynamics further and further away from the United States and more as much as it can towards this policy of self-reliance. So we've seen a real decrease in China's trade with the proportion of its exports going to the United States. We're seeing even sort of in the last sort of few months with the tariff problems, China turning to its neighbours, to Vietnam and elsewhere as ways of skirting through the tariffs. So I think long term there is a structural shift happening within China to move as much as possible away from a reliance on trade with the United States. So I suppose the concern here is we hear Bessent speak of, no one wants to decouple. That is reflecting in many ways a reality that decoupling is impossible, and it has been, and these tariffs have shown that. But what China has been doing over a much longer period, and what China is continuing to do, is to shift the way that it manufactures and shift the way that it trades and produces its own energy, in fact, in ways that create a less of a reliance on the United States.
How does Bessent talks about rebalancing? He wants to rebalance. Is it possible with the numbers we've got here? What is a result out of these negotiations that leads to a balancing of the US economy and the US trade deficit? So
this notion of a rebalancing and of changing the economy that way, it's really misunderstanding the way that trade operates today and the very fact of the trade deficit, right? This trade deficit has been decades in the making. It's a consequence of the way in which global manufacturing and global finance has operated really since the end of the Bretton Woods system in the 1970s. So this is the trade deficit is a product of a much longer-term set of structures of the international economy, that no kind of tinkering around the edges, even attempts on the part, there's less tinkering and more destructive, the Liberation Day tariffs, they're not going to be able to redress this much longer structural part of the US economy and the global economy, for that matter.
I thought it was fascinating that in this press conference he talked about, or I should say that China has been increasing their partnerships with the likes of Brazil, with Mexico. He mentioned the fentanyl story, the cartels even came in. Here's what he didn't mention. He didn't mention the Treasury story. That's what the markets are freaking out about. As the U.S. Treasury Secretary, no comments on that. Yeah. He did, however, kind of create a little dig there when it came to currency manipulation, which to me, those are the two red flags there, the cartels and the currency manipulation, that you could very easily pin any sort of reversal of this optimism to. Do we need to be looking at Mexico next, or Brazil next, or some of these kind of other emerging markets in terms of the ripple effects of this?
I think I think this is really important, the cartel conversation, and part of what's important there is that is Bessent speaking to a domestic US audience as well. He's very much sort of flagging and connecting the trade talks with China to a domestic situation and the fentanyl story there. In terms of what's happening in terms of the treasuries, the other thing I'll say before I get to sort of Mexico and your question there, it's really, I think, also important you're absolutely spot on. The absence of talking about the treasuries is in many ways an absence of the sort of, for want of a better word, trump card that China has it could escalate things if it had wanted to. And I think it's not in China's interest to sell off treasuries or to escalate things financially, but it's certainly a possibility. It's within China's interests narratively in terms of politics to present the United States as the one that's been creating the problems. But that is a sort of factor underlying a lot of these dynamics too.
Do you want to talk about Brazil? Should we talk about Brazil?
Yeah, talking about Brazil. Yeah. Because, and I say this because when we showed soybean pricing this time, it's kind of having deja vu from the first Trump trade war, because soy and corn are the two largest American exports. I think the number two is like Boeing aircrafts in terms of value. So walk me through that story in terms of China getting their soy and corn from other places.
Yeah, and this is really, really important because that is a significant sort of soft point, if you will, in sort of China's own reliance or the sort of the interdependence with the United States. And we've seen again that not just very similar in many ways to the ways that China has been shifting its manufacturing supply chain dynamics to sort of other parts of the Asia-Pacific region. So too has it been shifting how it sources and gains its agricultural needs. And this has been a longer term shift. And we're seeing that real crunch point happen with US farmers. We saw it in the first trade war, the first US-China trade war. In the first administration, so many of the sort of hardest hit within the United States were the farmers, were the soybean farmers and elsewhere and others. And part of what we're seeing, I think, is China's capacity to shift over a longer term where it sources its agricultural needs. And that's part of, I think, why with the trade deal with the UK, for example, having agriculture within the conversation in the UK-US trade deal was so important, precisely because of what you're saying, Kriti.
If you're sitting in Brussels, what's your takeaway from what has just happened? What do you learn from this? How does it change the way you think about the way that you are going to be dealing with the United States?
I think what this is indicating, if you're in Brussels or even elsewhere, is that there is a real thread within the Trump administration that is seeking to de-escalate the chaos that has been marked the first few months of the Trump administration. There is a thread that's trying to create a set of norms and a set of ideas underpinning the actions that have been taken. I think it's very important, though, if I'm in Brussels or elsewhere, to keep in mind that this is very retroactive, right? Yeah. That the chaos has already been unleashed. And what Bessent is doing is cleaning up the mess. And it's a really important cleanup, and it's an indication that there is a willingness on the part of both the United States and China to negotiate. But it also, we need to keep in mind that it's coming from a place of having had the shop completely sort of uprooted. And that is a much more important, I think, longer-term thing to keep in mind, that there are members of the Trump administration, I mentioned Peter Navarro, but there are others who do take a very different approach to the way in which trade and the United States' place in the world should operate. And that isn't going away yet. It might, but it hasn't yet.
Not yet.
Not yet.
Elizabeth, thank you very much indeed for joining us this morning and providing us with analysis. Perfect timing as we have watched that press conference and the news from it unfold this morning. Elizabeth Ingleson, Assistant Professor at the London School of Economics and author of Made in China. when US-China interests converge to transform global trade. I want to leave you with some pictures that are coming out of London. Another press conference is taking place as well this morning. Actually, I'm not going to take a break. I'm not going to leave you. I'm just going to show you these pictures because Keir Starmer, the British Prime Minister, is currently addressing the issue of immigration in the UK. I bring these to you for a number of different reasons. Obviously, it is significant that the Labour Party is moving right on this issue and taking a hard line when it comes to immigration, but also the impact that it's going to have potentially on the labour market in the UK. Just keep an eye on this. This is a significant factor in terms of the labour market and how you think about the labour market is going to evolve here in the UK and potentially the tightness of it. Let's take a quick listen to what the Prime Minister is saying.
For many, many years. Thank you. I've got Jack from The Sun. Jack.
Thank you, Prime Minister. You said just now this is a comprehensive plan to bring down legal migration. You also said in the election you had a comprehensive plan to bring down illegal migration. And so far it seems that isn't working. Small boat crossings are going up on your watch. So why should voters think that your plan to bring down legal migration will fare any better, especially given you're considering an EU youth mobility scheme, which could actually increase it?
Well, let's tackle that head on because nobody should be getting in a small boat to cross over the channel and illegally entering this country. The last government lost control of the borders. It falls to this government to clear up that mess in the same way we're clearing up all the other messes that they left behind. I am convinced that the way to do that is to take down the gangs that are running the vile trade. And for that reason, we've drafted and put before Parliament a borders bill, which follows through on the promises I made, which is we need to give law enforcement greater powers, going down the counter-terrorism powers. The thing that distinguishes counter-terrorism from other law enforcement is you can take action earlier. You can be preemptive. You can operate in a completely different way. That's why we've gone for a package that allows law enforcement to get in much earlier. That is going through Parliament. Who is voting against that? The Tories, who caused the problem in the first place. Thank you, Jack. Martin from the Daily Mail. Martin.
Prime Minister Martin Beckford from the Daily Mail. Gary asked if you've been on a journey on net migration. Similarly, you talked about tough enforcement. One of today's measures is for foreign nationals convicted of any offence.
OK, we'll leave Downing Street. You can continue to follow that, obviously, and we will continue to cover it here at Bloomberg, the press conference that is being delivered by Keir Starmer on the issue of immigration and the UK government's new plan. But let's return now to the issue of trade. And we were addressing just a moment ago with Elizabeth the issue of how the EU reacts to this. And I think that feels really relevant this morning. How is Brussels perceiving what has just happened?
Absolutely. A very telling line from Scott Bessent that the UK and Switzerland have moved ahead in the line of trade deals, but the EU has fallen behind. Let's bring in Oliver Crook, who, of course, is monitoring how Brussels is bracing. Ollie, the view from Brussels, what did you make of that?
Yeah, so listen, Kriti, as I think for a number of us, but particularly everyone in Brussels, really the ears perked up when we heard Scott Bessent basically saying that the UK had shot to the front of the line. So too had Switzerland, that the EU has been falling behind. We know that the sort of EU trading relationship with the United States is the most important for the European Union, really one of the biggest trade relationships on the planet, $1 trillion every year. And the question is, have they made any substantive progress? And it sounds like they really haven't. We were expecting to get some of the proposals from the EU in front of the U.S. administration to begin to have a sort of concrete conversation in terms of where there could be compromises, where they can make those sort of advances. It does not sound like that is happening right now. When we listen to what we heard from the Treasury Secretary there, Scott Bessent, really talking about Switzerland, how much of a better job they have done. And I remember just a couple of weeks ago when we were in Warsaw at the finance ministers meeting, the Swiss president is also the Swiss finance minister. And when I spoke to her, saying that she had really been on that call with Donald Trump trying to impress the importance of the Swiss economy and how valuable Switzerland is to the U.S. economy. And you actually heard Scott Bessent talk about that. A nation of 9 million people talking about the hundreds of billions of dollars that Switzerland invests in the U.S. economy, especially on pharmaceuticals, especially on advanced manufacturing. So those are the sorts of appeals that seem to be cutting through to the Trump administration. But as for the trillion-dollar trading relationship of the EU seeming to fall down the priority list is something that obviously is going to be very closely watched by the finance ministers here convening in Brussels. All the EU finance ministers will be meeting today and tomorrow, and we'll be speaking to one of those finance ministers in about 45 minutes' time, the Greek finance minister, and get sort of his appraisal of basically what we got from the U.S. administration, what they can read into it from the European side, and what critically non-tariff barriers are the Europeans willing to bring to the table, because I think that that is still the very sort of great unknown in these trade negotiations between the U.S. and the European Union.
Ollie, great stuff. Thank you very much indeed. Ollie Crook updating us from Brussels on how the EU is reacting to the news out of Geneva this morning. I want to say we're going to hear from the President at 9 a.m. Eastern this morning. We're anticipating that he is going to sign an executive order relating to the pharma sector. Healthcare stocks are down really sharply in Europe. But the big story for the President is going to be his trip this week to the Middle East. And ABC News is reporting that he could receive a luxury jet from Qatar to replace Air Force One. But I suspect that we are going to be paying attention to what he has to say in terms of policy as well. Let's bring in what we should expect, Jumana Basetchi from the Middle East. Jumana, lay out what the big kind of roadmaps, parts of this trip that we're going to need to focus on are going to be.
Yeah, well, Guy, you know better than anyone the value of those Boeing jets, and we're talking about something in the ballpark of about $500 million, and it raises a lot of legal and ethical questions because technically the U.S. president is not allowed to receive a gift from a foreign government without congressional approval. So you can imagine it's caused a lot of uproar back home, even though the Qatari side say that this is still in discussion phase, nothing has been agreed. But it certainly sort of lays the foundation of what is to be expected out of President Trump's visit to the GCC this week. And that is essentially, it's going to be about deal making, perhaps less about peacemaking. There's going to be a Saudi-U.S. investment business summit taking place tomorrow. Some of the biggest CEOs from around the world are flying in. Larry Fink from BlackRock, Jane Fraser from Citi. Lots of discussions about energy, artificial intelligence, potential partnerships on critical minerals. And you may have noticed that last week that several changes have been made to facilitate trade into the U.S. as well. So all of that on the agenda for this week.
Jumana, we're looking forward to the coverage throughout the week out of the Middle East. Jumana Basetchi joining us, as you can see, from Riyadh. That is it for the opening trade. It has been something of a busy morning, but the coverage continues right here on Bloomberg. Francine Lacroix and The Pulse up next. This is Bloomberg.